concerns about the high gross financing needs, which pose several liquidity risks due to high interest rates and pressure on the external account. The Debt Sustainability Analysis Report warned of high public debt risks and showed that negative shocks to the exchange rate would increase the public debt ratio until fiscal year 26. The report lowered the GDP growth rate forecast to 0.8%, slightly above projections by the IMF, World Bank, and Asian Development Bank. The inflation rate is expected to remain high at 28.5% this year and at 21% next year, and the report confirmed that total public and publicly guaranteed debt had risen by 7% to 55.8 trillion rupees in December 2022. The government has implemented actions to lower inflation rates in the future course to 6.5% by financial year 26. The Pakistani government expects inflation to remain high in the coming months, possibly hitting an all-time high of 38% in April due to food and energy price hikes. Finance Ministry's monthly economic update and outlook stated that the rupee's depreciation and rising administered prices have contributed to the increase, while slow recovery from flood-led damages has caused a shortage of essential crops. The government has reconstituted a National Price Monitoring Committee to ease inflationary pressures. Pakistan's economy is still facing significant challenges, but the current account has turned into a surplus, which may improve the external financing constraint and promote confidence in the economy. Pakistan's foreign exchange reserves crossed a $10 billion mark for the first time in the second half of the current fiscal year, with the State Bank of Pakistan reporting an increase of $30 million in forex holdings to $4.46 billion. The State Bank of Pakistan has reportedly been buying dollars from banks to improve its reserves, but has not yet received promised inflows from Saudi Arabia and the UAE, and is also waiting for the release of a $1.1 billion tranche from the IMF, despite complying with all conditions set by the fund. Meanwhile, Pakistan Stock Exchange saw bullish activity as investors hoped for the release of the International Monetary Fund's delayed loan tranche and the inflow of funds from friendly countries, leading to the KC 100 index settling at 41,099.58 points, up by 91.76 points or 0.22% from the preceding session. The Pakistani rupee appreciated by 0.03%, closing at 283 rupees and 84 paisa against the US dollar in the interbank market on 28th April. The US Federal Reserve called for greater banking oversight while admitting to its own failures in a widely anticipated report published into the collapse of Silicon Valley Bank last month. Federal Reserve Vice Chair for Supervision Michael Barr said Silicon Valley Bank's management failed to adequately manage risk prior to the bank's swift collapse, while Federal Reserve supervisors failed to take forceful enough action after they had identified issues at the Californian high-tech lender. The Silicon Valley Bank's failure on 10th March after taking on too much interest rate risk caused shockwaves throughout the banking sector and led to the failure of another regional US bank and the merger under pressure of Swiss investment banking giant Credit Suisse.